Welcome to the show, everybody. I'm Mayowa Adeyemi here with Oluwaseyi. And Oluwaseyi, if you are running a business in Nigeria right now, I need you to commit a single number to memory, the 21st. Because under the new Nigeria Tax Act and the rollout of the Rev 360 platform, missing that 21st day of the month to file your VAT returns is going to cost you dearly in automatic penalties.
The 21st. That is a very sharp line in the sand, Mayowa. And let's be honest, for years, filing VAT felt like an endless paper shuffling exercise, where people were manually typing numbers into a system and praying they didn't put a decimal point in the wrong place. But this new form VAT 002 on Rev 360, it's a completely different beast, isn't it?
It is a total paradigm shift. The Nigerian Revenue Service is basically saying, we don't want you touching the main return form anymore. The main form VAT 002, specifically lines 10 to 150, is completely locked down. It is automatically populated by the system. The only thing you, the taxpayer, are allowed to touch are the underlying schedules, which are schedules A through F.
Wait, let me make sure I grasp the mechanics here. So if I open this Excel workbook, the actual main sheet, the one with the big declaration at the bottom where I sign my name, is color-coded?
Exactly. The workbook uses a very specific color coding system. The cells highlighted in yellow are the fields you must complete manually. The cells in green are automatically calculated by the system. Once you fill out your yellow fields in the schedules, those numbers flow instantly into the green cells on the main form VAT 002.
Ah, so if there is a mistake on line 150, which is the final VAT payable line, I can't just click on it and type over it to make it match my manual ledgers.
No, you can't touch it. If line 150 is wrong, it means one of your schedules, maybe your domestic purchases list in Schedule C2 or your sales adjustments in Schedule B, has an error. You have to fix the root cause in the schedules.
That is brilliant from an audit perspective, but I can already hear the collective gasp of entrepreneurs who are used to adjusting their final numbers at the last minute. This means your bookkeeping must be absolutely pristine before you even log into Rev 360.
Precisely, Oluwaseyi. If your records aren't clean, the system will expose the gaps immediately. And remember, the deadline is the 21st day of the month following the transaction. No extensions, no excuses, or the system will automatically trigger late filing and payment penalties.
Okay, so let's roll up our sleeves and look at these schedules. Let's start with Schedule A, which is the sales schedule. I notice there's a column called Product Category, where you have to enter a code, 0, 1, or 2. What are we looking at there?
Those codes are your VAT classifications. Code 0 is for standard rated VAT-able goods and services, which are currently taxed at 7.5%. Code 1 is for exempted goods, like basic food items or medical services. And Code 2 is for zero-rated items, which mainly covers exported goods and services. You have to classify every single sale using these codes, along with the customer's tax ID and the place of consumption.
So if I sell agricultural seeds, which are exempt under the Act, I must tag that transaction as Code 1 in Schedule A, and then the system automatically deducts it on line 15 of the main form.
You've got it. It flows from Schedule A. Then Schedule A1 isolates those exempt sales, and the system automatically subtracts them from your total gross sales in line 10 to arrive at your taxable sales in line 25.
That makes sense. But what happens when things go wrong? Like a customer returns goods, or we write off a bad debt. How does the system handle those corrections?
That is where Schedule B comes in, the sales adjustment schedule. If you issue a credit note, you must list each invoice requiring adjustment separately in Schedule B. You can't just lump them together. You enter the original invoice amount and the portion being adjusted. The total adjusted value is then transferred to line 22 of the main form to reduce your output VAT liability.
Okay, so that's the sales side. What about the money we spend? Purchases and input VAT. I see Schedule C is for local purchases, but there's also a Schedule C2. Why the split?
This is where the Rev 360 integration gets really interesting. Schedule C2 is your purchase list. This sheet actually auto-populates directly from the government's VAT track and e-invoice platforms. It pulls in the transactions where other businesses sold to you and registered the VAT.
Wait, so the government already knows what I bought before I tell them?
Welcome to the digital age. But sometimes there's a variance. Maybe a supplier hasn't uploaded their invoice yet. In Schedule C, you have a reconciliation column where you can manually enter the variance to make the total match your actual physical receipts.
Ah, so that's how we claim our input VAT credit to offset our output VAT. But what about importing goods? Many African entrepreneurs rely on imports.
For imports, you use Schedule D. You must input the bill of lading, the Form M number, the vessel name, and the country of origin. The system then automatically calculates the import VAT based on the NGN exchange rate and transfers it to line 90 of the main form.
And what about Schedule E, self-charge VAT? That sounds a bit counterintuitive. Why would I charge myself VAT?
It is a common point of confusion. Self-charging happens when you consume services from a non-resident company, like foreign software providers or consultants who don't have a physical presence in Nigeria to charge you local VAT. Under the law, you must self-charge that 7.5% VAT, declare it in Schedule E, and pay it over to the FIRS.
I see. So it's about leveling the playing field so local providers aren't at a disadvantage. Finally, Schedule F, sales to MDAs.
Yes, government ministries, departments, and agencies, as well as certain appointed agents like oil companies, are required to withhold VAT at source. When they pay you, they deduct the VAT and pay it directly to the NRS. You record these transactions in Schedule F. This gives you a credit on line 110, so you don't end up paying that VAT twice.
This is incredibly robust, Mayowa. It really feels like the margin for creative bookkeeping is shrinking to zero. My takeaway for business owners listening is simple. Don't wait until the 20th of the month to start sorting through your shoebox of receipts. Get your schedules aligned with your internal ledger weekly.
Exactly, Oluwaseyi. Financial freedom and compliance are built on discipline and strategic action. Clean data in, clean returns out. Let's build, comply, and prosper. See you next time, everyone.
Goodbye, everyone.